Just stretching. It's like to stretch. Like to stretch. Oh, Stuart, we're live, but your Facebook account has said it needs reconnecting. I don't know if you're able to do that while we're live, mate.
I will sack it off, mate. Let's cancel it.
See you later.
Yeah, come on.
Go and share the brand one to your page. Anywho, looking forward to this chat this evening. We've got a special guest. I think someone might have their laptop a little bit too loud. If we could turn the volume down as well. Got a special guest, Neil, Stuart, and Ves.
I'm not the special guest.
I felt bad if I just highlighted Ves for a minute there. And why have I got this banner here? Well, as the title say, Ves is a mortgage advisor. Rates have been the big topic of conversation this year. Let's be frank, this year it's been all the topic of convo. So Ves is going to give us an overview on the mortgage world. We're also going to touch base on if you're getting remortgaging needing doing soon, which I am. So we can touch base on that as well. And what is going on with rates at the moment. Of course, we're going to cover a little bit of Maidenhead, what's going on with Stu Bock. I think wedding bells will be ringing soon for him. So
next 10 days.
Boom. Big news. Are you nervous? Have you done your speech?
I'm 90% there on the speech.
That'll do then.
Just need probably a little session with you, Ian, actually, just to run it out.
I did an epic speech actually. So yeah, if you want the video, if you want the video, I'll send it over. But yeah, speech is very important. Although the groom speech is the easier of the speeches, to be fair, because you just got to do a bit of thank yous and stuff like that. Make sure you kind of mention my wife a few times. Everyone cheers. It's lovely. The big one is the best man speech. That's the one where you've got to be good. You've got to be good. In fact, put it in the comments if you're watching. What's the biggest speech? The father of the bride or mother, depending on the situation, best man or woman, or the groom or the other bride in this day and age. So let me know what you think.
I saw bridesmaids doing a rap the other day. They'd done a special speech for the bride and groom, but they'd done it in a rap to Eminem, to an Eminem track, which was pretty epic. So
nice.
That'll be the next one. Stu's gone. He's had enough.
He is nervous. We have scared him.
Neil, he didn't like his Facebook isn't linked. He's like, no, I'm out of here.
Neil, you're all good though, yeah? Everything's good in the world?
All good here, and it's just interesting conversation because I've just taken 42 minutes on a viewing, which is why I was running around like a madman, even though the viewing was on Shinfield Meadows. So, but yeah, the topic of conversation during that was what they paid for it, what the rates are looking at, and everything along those lines. So yeah, it'll be an interesting conversation, especially with Ves involved as well. That'd be good.
Stu,
all good. He's back.
We were worried then.
Nervous 60 seconds there.
We thought you did a road runner straight out the window. I was like, no way, I'm not getting into this.
I've got my speech advice, I'm gone.
Right, Ves, let's get into the mortgage world. You take a swig of water. It's been a very interesting couple of years in the property market, in the mortgage game. I have had conversations with people just 12 months ago where we were agreeing a buy-to-let deal at 0.89%. We now look at the rates at the start of the month, shall we say, and you do well to get something below a 6. So what is the mortgage news at the moment? What is going on in layman's terms or estate agency terms rather than mortgage advisor, real detailed terms, if you don't mind?
Yeah, of course. It's certainly been a weird 24 months, hasn't it? And I think more so towards the last 12 months, it's been really interesting. And I think the conversation seems to change almost week on week, but like the common thread, it really is just having to get used to almost a new normal. And I think there's a few shocks that are coming to people in terms of remortgaging, which I know we're going to touch on in a bit. But it's also just staying on top of it. It's very difficult at the moment unless you set a Google alert for yourself to read the mortgage news daily to really have a solid understanding of exactly what's going on. But on a more positive note, we had a bit of good news this month. We had the inflation data seems to be a little bit more positive this month, and I think lenders have reacted to that straight away. And whether or not you can deduce that perhaps has some kind of bearing on what they think is going to happen to the base rate, whether or not these hikes are going to pause, we don't know. But a few lenders reacting more recently in the last 24 hours, Barclays, Coventry, and NatWest, to name a few, just slashing rates a little bit. But it's certainly not good. It's kind of a drop in the ocean. From somebody going from the 0.85 that you mentioned to a 5.85 or a 6.66, for instance, is still a lot to stomach. I know landlords being hit particularly hard as well. It's very difficult to shift those costs elsewhere. So it's not great, but it's not terrible. And I think we take the positives where we can get them at the minute, especially with coming out of the summer holidays. We're going to be looking at, where the positives are and what are we going to be looking towards the latter part of the year.
Yeah, no, appreciate the wrap up there. And it's good to see, I think, Stuart, for us, when we see the big lenders, the Barclays, etc., when they're coming in and dropping rates. Who was it yesterday that I had? Nationwide, I think. Nationwide had done like 0.45% drop on a lot of their new business clients and their existing clients. And that's a 0.5%, swing. That's really good news, right? So Maidenhead's obviously a marketplace with high value properties. What conversations are you having at the moment? I know you've just completed on a nice big £1 million property. You've got a couple more in the bank coming through as well from a listing perspective. So what are the clients saying over there?
Well, it's interesting in Maidenhead because people don't just buy here to have families here. They buy here to invest because of Crossrail as well and the connections to London. I was with someone yesterday and we started the conversation with, well, I asked, what were your plans? Like, why am I here? And they're like, well, look, we've got two options. We'll rent it or we'll sell it. And I was like, okay, let's go down the rental option first. Can you get a buy-to-let mortgage? And they were like, yeah, we think so. And I was like, cool. But the buy-to-let mortgages have changed in a way that the rental criteria is a lot more expensive. And I said to them, I was like, okay, so what would that cost you? And they said it would cost £2,000. And I was like, but you're not going to get more than £2,000 on the rent. And they were like, yeah, I know. And then when we factored in tax and things, out of that £2,000, they'd have to give £800 away just to the tax man because of the way the government's changed it. So it's in a backwards way. They then made their minds up that you couldn't let it. So then we went straight on to sales. It was a 5-minute conversation and let was chucked out the window. But I think the changes in mortgages have hit the let to buy properties in Maidenhead. And there's a real lack of knowledge on the let to buy process now, especially in my town. But I haven't sold to someone let to buy this year just because they can't make the figures work or the stress testing work. But it's forcing people to sell. So we're seeing in Maidenhead a lot of flats on the market to then try and buy the homes, which there aren't many homes on the market like the houses. But because there's so many flats, they've dropped massively in value. So actually, the flat owners just can't win. They can't let to buy and they can't sell.
It's quite common at the moment, Ves, isn't it, with the landlord world? Although the mortgage rates for buy-to-lets seem to be the best part of 1% lower for the same loan to value on a resi, but it's hard for the landlords. I mean, the exit rate for landlords at the moment, the rental market's a whole different combo. The tenant frenzy market is just bonkers. We can't advertise, to give you an idea, Ves, we can't advertise a rental property for longer than 24 hours because we just get bombarded. So we have to take it off the internet, deal with the 50 tenants that came in the first 24 hours. Obviously, with 50 tenants, find the right one, let it, and then put it back as let. Because if we leave it on for 48 hours or 72 hours, we have no space left in the database. Yeah. So, it's two ends of the spectrum there. Hard for the landlords, really hard for the tenants.
Yeah.
But crazy market.
You touched on a couple of really interesting points, Stuart. And I'm glad you used a case study. I can't use a case study because I have to use a big disclaimer to say nothing I'm about to say constitutes mortgage advice. It's just purely for illustration purposes. But there really are things people can explore if they're really set on keeping their home from a mortgage perspective. It really depends on how far along they are, for instance, in their current fixed rate product. Often if they're midway through a product, you might go for a consent to let, for example, as opposed to fully remortgaging. But that again could create an issue down the line that it's almost delaying the issue. So really the best thing for them to do if they're going to explore that option is speak to an advisor that they trust, so that they can get those figures down. And I'm sure they might have done that already if they were quoting mortgage figures to you on the appointment.
Yeah, like their product expired in November, and it was just a case of us like once I started blurting out like tax fees, estate agency fees, suddenly your boiler breaks, that fee. It's non-profitable for some people.
Yeah.
But yeah.
And actually just to add on to what Ian mentioned in terms of a lot of landlords having the same issue, I was reading an article just this morning or yesterday morning that it's predicted that landlords are exiting the market about 8.5% quicker than anticipated. So those costs are hitting landlords, and there comes a point where they might look at the situation and they think, yeah, I'm going to be selling. I'm going to be selling at 90% of the value, let's say for argument's sake, but I'd rather get 100% of that 90% than 100% of, 85 or 80% further down the line. So there's tough decisions being made, but it looks like they are making them.
Yeah, it is very difficult. I mean, first time buyer world, Neil, and first time seller world, over sort of Shinfield and sort of a lower early in and around you, Winnish, etc. What's the conversations that you're having there with that part of the market? I know you deal with the whole market, but the first time sellers, I'm always interested by them because they've never done selling and buying at the same time before. So it's almost the biggest decision for them, I find sometimes. But what sort of convos are those clients having with you?
Yeah, I think I love first time sellers because it's the double-sided spectrum in the sense of, right, it was nice and easy before, and see a lot of Shinfield being new builds. Oh, it was really easy buying from a developer. Maybe not this time around when you're selling and buying on. In terms of the finances, what I have to just make sure I drill home is, for most people, it's all relevant and relative. If you're moving within a market, especially if you're upsizing, it's probably a benefit, because if you're moving from a 3-bedroom property to a larger 4-bedroom property and your price is fluctuated down by, say, for example, 5%, 5% of that greater value property is obviously a bigger chunk. So that's what I just keep mentioning to sellers, because a lot of people are not concerned. I wouldn't say concerned. It's a negative word, but they're just cautious with it. And they're doing their research a bit more, and they're just mindful of certain things. And I'm sure Stuart's the same, but you get asked all the time, is it a good time to sell? Is it a good time to buy? You buy and sell when you want to buy and sell. You don't worry about it if you're moving within the market. If you're selling and moving to Cyprus, it might be a little bit different. But ultimately, if you need to upsize because your daughter's going to school or you need to get into a school catchment, you do it for that reason. So the price element, it's always going to fluctuate. But obviously Ves being on the call is great, because I'm always saying to any buyer, whether they're selling and buying or just buying, make sure you can afford it if the mortgage rate was to change. Because everything's gone on quite drastically in the last 6 to 9 months in terms of rates jumping up, and now people going, oh crap, my mortgage has gone up by 700 quid a month. I can't afford that. I need to sell. Make sure you can afford it in a best case scenario and a worst case scenario. And then you're going into the transaction happy that you can afford that house for the next 5-10 years if something was to change at the end of your term. So I think it's like anything. It's just educating people, which is where first time sellers come into play, because they've only done one side of it. So I think it's still a great time. There's still loads going on. I've sold 3 in the last week that haven't even made it to the market. So it's crazy.
It's still crazy out there. I mean, in the UK, there is a shortage of property. So I think where people outside of the market kind of go, yeah, the market's crashing or blah, blah, blah. But it just isn't, because there is a shortage of property, and there has been a shortage of property built for decades and decades, and simple supply and demand levels things out to that effect. And we get statistics sent through from one of the major portals that we advertise on. And when we got our statistics through in July, it highlighted that as a group, Avocado Group, we'd put under offer 90.5% of everything that was listed in that month. So 9 out of 10 properties that or more than 9 out of 10 properties that Avocado listed in July went under offer. There's the market. That's not a slow market, is it, chaps? So I'm not saying, and disclaimer, like Ves has to put a disclaimer, not all estate agents are that good. I have to highlight that, just in case you got the wrong advice there from me too. Remortgaging. Let's talk about remortgaging, because I'm going to be honest, I got a remortgage up early part of next year, and I'm a little nervous, Ves. Should I be less nervous after the last couple of weeks, or should I be planning to put my house on the market with Stuart or Neil?
Yeah, great question.
I'm not paying a fee if I am.
I'll sell it. I've got a buyer.
I'm not interested.
Yeah, the point is that of course you're nervous because you know that your repayment's going to go up. So who wouldn't be nervous with so much uncertainty around? I think the key thing is to try and get ahead of the issue in these circumstances and just get yourself informed on what that likely payment is going to be like. And you can start doing that a lot earlier. You can start making that and doing that research 6 months in advance, and potentially securing yourself a rate. Again, the recommendation, the only advice that I can give is to get a mortgage advisor on board, and especially one that you can trust. But it's something that I mentioned to you earlier today, actually, that's worthwhile noting in this situation, is that there are a few nasty surprises for people when they go to remortgage and they look at the valuation that their current lender has for their property on the system. Is that's obviously been going down. So it can be a bit of a surprise, especially for people that might have purchased very recently at quite a high price. And then we've had a bit of a slump in the market in terms of prices with these interest rates naturally. It can be quite a shock to see that perhaps you find yourself in a different bracket from a mortgage perspective, from a loan to value perspective. So again, it's just worthwhile doing the research on this and getting yourself ahead of the problem, just so that you actually have time to make the informed decisions, because the main thing you led with is that you're nervous about it. And when people are nervous, they make decisions that they wouldn't normally make. And that's really the part of the mortgage advisor in this situation, is to try and keep everybody calm and making right decisions right through to the end. So in that respect, the earlier you get yourself onto that issue, the better the outcome is likely to be. And reserving a rate, doesn't necessarily mean that you have to use that rate. It gives you a bit of flexibility in terms of what will happen with interest rates.
Are all lenders 6 months? So is everyone got the 6 month ability leading up to their kind of remortgage to lock in at that rate 6 months in advance, or is it scattergunned?
Not all lenders. Sometimes it will be 6, sometimes it will be 3, and again, that's why you just need to make those inquiries early on.
Okay. Say hello to Darren that's checking in. Thanks for watching. We got Andy, might be on holiday. Hello, Andy. Jamie's just laughing. Things funny. And then we got a great question from Shona here as well, which I'll come to. And yeah, just on your point, and I think for other people that are in the same position as me, the one thing that fortunately I'm able to do is I'm able to plan around it, because I know it's coming. I've known it's coming obviously since the 3-year fixed term that I initially did, but I've seen obviously what's happened with the rate. So I'm able to plan around it and look at what it's going to cost me, and then plan around those costings and plan around next year and look at what works for me. And for me, that meant the way that I kind of structured my finances last weekend, funnily enough, is I almost did my own profit and loss, looked at where I could make some changes that will have an impact next year for me. So it's all about sitting down with a mortgage advisor like Ves and being able to plan around it, look at what suits you. You know, if you've got some debt or something like that, or a loan, or something that you can maybe remove from the equation to counterbalance the monthly costs, all these little things that you can look at can have a big impact as well. So yeah, all really good questions. Darren's got a question around hair for you, Ves, which we can get to another time. But Ves is, I mean, I think it suits you, mate, if I'm honest with you. but he obviously knew you at a time when you had hair like Neil. So yeah, there we go, back in the day.
He'll get there. He'll get there.
Shona's got a great question here, which is a direct question, actually, but one that you need to answer, Ves. Why should buyers go to a broker, or an advisor in this case, instead of looking to lenders directly? Why would someone benefit from speaking to you rather than picking up the call centre at HSBC?
Yeah, that's a great question. The real answer to that, and I feel like you partially answered it for me in what you just said, is that there's a lot of mortgage products out there at the minute, and they're chopping and changing all the time in terms of what is best. And I think often it's easy to say, okay, I need the best interest rate, but actually what a mortgage advisor can help you do is find you the best product with the best lender, and they'll also have an understanding of the criteria of each lender and which ones are likely to look at your situation more favorably. There's a lot of variables when it comes to mortgages that people don't often consider. It's not a case of just filling out some paperwork and it's all rubber stamped and off you go and grab the house. There's a lengthy process in terms of application. And if you fill in that application wrong, then it's very costly, because having a rejected application doesn't look great for the next place you apply. So it's also having somebody who's got your best interests at heart, helping you complete that paperwork as well, once they've found you a suitable product to move forward with. And as you guys, I'm sure, will be able to tell, it's never smooth. So there's often issues that arise, that bumps in the road, or whatever you want to call them, that just require people to be quite tactful and have a knowledge of the system so that you can navigate them without blowing the whole thing up in that respect. So I think really the point is, you're getting the expertise, you're getting help finding the right deal for you personally, and you're getting somebody who's going to try and ensure that that goes through into completion. And at the same time, I kind of touched on this a little bit earlier, but it's a difficult time. You're making this, you're being asked to make lots of decisions from lots of different places. Your solicitors onto you, your sellers or your buyer solicitors onto you, your estate agents onto you, the other estate agents onto you, and often it can get a little bit much. And when people are a little bit more nervous in these situations, they can make the wrong decisions, or they can be influenced into making a decision that perhaps isn't in their best interest. And that's really something else that the mortgage advisor can be there for you in that time that is quite stressful, can be that calming influence, because they deal with it on a daily basis, similarly to how a good estate agent can.
I was going to say a comment on that, and what I've noticed recently, or will touch on, is similar to solicitors and an estate agent, make sure you're not going for a cheap option when it comes to a mortgage advisor or broker, because someone being knowledgeable and on it and a decent broker or advisor can cost you the house or not. And we've had situations recently where multiple offers have come in and the broker just hasn't returned calls or emails when you're trying to qualify them. Yeah. And then further down the line, another scenario where you're chasing a broker and you're not getting any answers, and there's timelines to certain things. And like anything, make sure you're using someone reputable that you've been personally recommended to, not just Google cheap mortgage advisor or cheap broker. Cheap and good don't go in hand.
No, very often not. And I think, Stu, we've all experienced it, haven't we, where you've got to that point, there's deadlines involved, maybe there's a tenant in the chain, or there's a new build in the chain, or a mortgage offer's due to expire somewhere in the chain, and you've just got that one person that went direct to their bank. They can't get hold of anyone. no one can speak to anyone. They've spent 4 days on hold and still no response. And it just holds everything up, and it causes, an absolute calamity.
Yeah.
So good advice.
To that, I feel like it's worth mentioning is that the advisor has to also tell you if your bank is offering you the best deal and it's actually best to go direct to your bank.
Yeah,
they are obliged to tell you that. So if that's the case, then that's exactly the advice that you'll receive. They have the best outcome for the client in mind. So in that respect, it's a win-win either way, because you're either going to get a suitable product for what you're looking for, or you're going to get directed to the best place to go, even if that advisor can't help you in that situation because there's a more suitable rate available directly to consumer.
Yeah, no, good points. Stuart, anything launching that you want to kind of promote or talk about over the next couple of days or couple of weeks?
So I've got a tasty auction property coming on in First Plat.
How tasty?
Very tasty. And with the right knowledge, or if you've done a little bit of a project before, it's probably not a first time buyer if you've got 2 kids type of property. It's more of a, do you know what? I've done a kitchen and a bathroom, and my next project, I probably want to be able to plaster walls, fix things, expand the property. It's got an amazing garden. It backs onto one of the best parks in Maidenhead. It's double-story extended. It's going to be going live with me and Patterson's hopefully in a couple of weeks at 500. There's a guide price. Next door's under offer at 600 non-extended. So hopefully it'll be priced well enough to get the people through the door. I'd love it if someone who was local to Maidenhead, who maybe was a bit of a plumber or a builder, came and had a look. That's tasty. Potentially got something coming on the edge of the town centre. From what I said earlier, they've decided they're going to sell now. And that's a really nice 3-bedroom semi that is perfect if you've got young kids. Get straight into it. Great school catchment. And there's a couple of other little bits bubbling that I can't quite say yet because I don't want to jump the gun.
Good. Fair enough. Well, the hottest buyer in the market at the moment is Todd Bowley. So give him a call. Give him a call, mate. From a Chelsea fan.
What's funny is if this was Man United spending that money, you would have been on to us so hard.
I did hear after the Maguire breakdown with West Ham that Liverpool had pretended they'd gone in with a bid, but Chelsea didn't fall for that one. So, there we go. Neil, what about you with your Man United flag over your left shoulder? What's bubbling outside of the property transfer market? What have you got going on in the property transfer market?
Always got stuff under my sleeves, haven't I? We've got, between Dan and I, 6 that are due to go on in the next 2 days. So we've got an epic flat in Arborfield, ground floor with its own garden, which is a really nice Millgate property. We've got a 1-bed flat in Shinfield Meadows that's due to go to the market. Very nice condition as well. Very popular location. Shinny Mini, as I now call it. Shinny Mini, do you like that? Shinny Mini. I've got a 2/3-bed property coming on in Shinfield Meadows, which will be super popular because it's the Loddens built by Bloor, which are the biggest 2-beds around. The square footage are huge. Lovely big kitchen, diner, utility area, toilet. And then what the guys have done, which a lot of them do, is put a partition on one of the bedrooms, which is a huge, too big, in fact, second bedroom. So you've got massive main bedroom, ensuite, guest room, and then a single sort of study cot room. So it's a 2/3 room, 2.5 as I'll call it. And then I've been venturing out a little bit. I've got a 3-bedroom property coming on in Thiel on the High Street, opposite 2 other estate agents' offices.
Love
And then I've got a 4-bed property coming on in Basingstoke as well at a great price of 385 for a 4-bedroom townhouse.
Nice.
So
you're busy. You get around, don't you?
And I've nearly forgot another one. I've got Lower Early, been out, took the details today with my secret little helper in Dan's absence. But I went out and took a 3-bedroom terrace property, townhouse in Radstock catchment. It's in Privet Close. So Radstock, near everything, near all your amenities, vacant, ready to go, 400 grand. So again, good price. 3-bed, ensuite, townhouse. Bosh.
Nice. Question for you, Ves, I think from Sanjay here. What's better to go on now? He said a variable rate or a fixed term mortgage. He may mean a tracker, or he may mean just sit on your variable or re-go on fixed. But there's two different questions there. One that I've just made up and interpreted, and one that Sanjay's typed. So do you want to answer both of them?
Yeah, it's a great question. And it's one that I can't unfortunately answer generically. The reason there's so many different products out there available for everybody to use is because some of them will be useful in certain circumstances and some of them will be absolutely useless. So in that respect, you have to look at what people's plans are for that property, and you have to understand their situation. You also have to have a really great understanding of their attitude to risk. And that's, again, I can't give advice on this, but that's typically a conversation that you would have early on in that process, and really understand what somebody's attitude to risk is. If somebody is slightly, I mean, put it this way, if you were in a circumstance where, as Sanjay said, you've got a 2-year plan, I can't tell you what the base rate is going to do this month. The start of next month. I can't tell you what it's going to look like. I can't possibly speculate what inflation figures are going to look like, because, as Bank of England sometimes like to say, forecasts are wrong. So in that respect, we can make the best decisions available to people right now with the information that we've got available. But that's why we do a detailed fact find about people's circumstances. And that includes everything in terms of their income, their expenditure, their liabilities, all of their other assets, the properties that they might hold. And then we make an informed decision. So I wouldn't want to say something that somebody can watch this live stream and think, okay, yeah, that actually suits my situation, because I've got a 2-year plan and this guy said in a 2-year plan you should do this. But actually, they might turn around and do something that's actually detrimental to their own interests. And then they'll turn around and they'll email Ian and they say, why is this guy saying this? It's a terrible idea. And that often
happens a lot
with interpreting short form content and really drawing financial conclusions from it. So really the trick is to speak to somebody who's qualified, who's going to fully understand your background, your future plans, and your attitude, and be able to provide some tailored advice to you.
Yeah, and I think with the challenge at the moment for people, there's obviously limits to what you can say because you're financially regulated. The challenge for people at the moment is the mortgage rates and the base rate aren't directly in correlation at the moment. Where we saw the base rate increase recently, mortgage rates declined. So why did that go up and mortgage rates go down? That's where the challenge sits at the moment. If someone was thinking, right, if mortgage rates are now starting to drop, maybe I'll do a 2-year tracker mortgage. But if mortgage rates drop for 2 years, but the base rate keeps going up, then that tracker mortgage is not the best advice. So that's a hard one to answer unless you know the individual situation. But at the moment, we're right in that crossroads of almost needing to really get gritty into someone's goals and individual circumstances. So, well answered by staying on the fence there, Ves. And I think that leads me nicely into saying, if someone wants to get in contact with you, what's the best way for them to reach out to you to do some more bespoke and individual advice, buddy?
I should have probably put my email address, just like Neil has, in my handle. So that would have been handy. But no, you can get in contact with me via email or via telephone. I'll put a comment down below in the comments section of this live stream.
Your email address, I'll type it in.
Yes. It's vd at talisifa .com.
Okay, right. It's in the comments if people want to get in contact with Ves. So there we go. Bada boom. Thank you so much for joining, Ves, and sharing your insight. It's great to hear from a mortgage advisor. It's cracking to hear that there's a lot going on with you as well, Neil, at the moment. Listings are popping, sales are popping. Stu, from everyone watching live. I hope the wedding is glorious. The weather is like it was today, would be fantastic.
Yeah.
I mean, it's a little sweaty in a 3-piece if you're going 3-piece, but
2-piece,
are good.
chinos,
Shorts, avocado hoodie, done.
Shorts is backup if it's too hot. Boat shoes, fish and chips for dinner, a little bit of mini golf in the middle.
Cash. Right. You go on holiday.
It's like wedding / stag do. It's a bit of both. There's a bit of fun in the middle. Hopefully no one will get bored.
Sounds good, mate. Sounds good. And when Neil heard stag do, he was nearly road running like you were earlier. So yeah, Shona sent in a nice love heart there. So she's obviously appreciated the advice as well. Obviously a great question from her. Sanjay, thank you for your question. Awesome. Darren, Shona, Andy, Jamie, thanks for joining us. Ves, thanks again for jumping on. Like I say, email in the comments if you want to speak to him. We'll be back next Thursday at 6 o'clock, as always. But if you've got questions and you're watching this after we've gone live, drop them in the comments and we will still answer them at any point. So have a great rest of your evening and enjoy the weekend. Weekend start Friday. See you later.
Nice one.
See you.
Thank you, James.
Thank you.
See you guys.